saw Metmar's full-year revenue falling to 2 billion rand, while gross profit lowered to 164.9 million rand, and they showed an operating loss there of 64.8 million rand. Headline loss per share coming in at 32.4 cents. Let's unpack all of the moving parts of the company right now. We've got the CEO of Metmar, David Ellwood, standing by at the desk. David, thanks for joining us. So, of course, certainly not solid numbers to report, certainly disappointing to turn from a loss, turn to a loss of 32.4 cents from a profit on the HEPS line of 34.1 cents. Overall, you've talked about lower volumes, low commodity prices. This time last year, did you know it would be this bad?
We didn't. Last year actually started much better than we originally anticipated, and we started the first quarter of our financial year last year quite positive and quite bullish in terms of we thought we had gone past the worst of the correction, and we could look forward to sort of stronger demand in the market. It did not materialize. It sort of came to a grinding halt probably May and then June, and got progressively worse. And we might be criticized at taking a very, very conservative or defensive approach to the business. We're a high turnover, very low margin business, and when things go wrong, they can go horribly wrong. So in tough market conditions like this, I think we're quite specific on being defensive and being maybe too conservative.
Give us an idea of what that means from a trading house perspective right now.
It's when you're in a market as we are today, you're dealing with Chinese who some of the smartest people around. When you have something which is maybe very, very slightly off specification or doesn't meet the absolute parameters of what you've agreed to sell in a strong market, there's no argument. You make an adjustment for the chrome content or the manganese or whatever it may be, and you make the price adjustment for the units that are missing. In a market like now, the consumers use this market to
negotiate prices down.
Find a way, start with a sort of rejection of the cargo and a whole renegotiation. And then on the basis of where prices are and where margins are, it's very, very difficult. So one has to be very careful. And we have really given some business up or taken a decision not to do some business because we thought the risk was too high. Our trading business didn't lose money. It didn't make a whole bunch of money, and a lot of the losses are through impairments and market write-downs. So overall, we're disappointed, clearly, but I think we are now past the worst, and that's what we thought last year. Let's see what materializes later in the year.
I mean, let's just talk about those impairments and some of the non-core assets up for sale right now, because investments, part of that, are part of the business operating loss there, as you say. It was quite sizable if you're looking at the bottom line, 94 million rand. How much of those assets that you held right now are considered non-core? How much are you looking to sell?
There are probably 5 assets that we're looking to dispose of. The value of those anywhere between 40 and 60 million. It's not a market to be disposing of assets at the moment.
Assets in South Africa, I mean, just tell us about some of the assets.
Some of them we were involved with this pairing zinc deposit. We have put that into, or put it onto the market. There are a number of interested buyers in there. They're busy with due diligence at the moment. And we have impaired all the assets to the value of what I think we've been over conservative in terms of the impairment as well. If we're going to have a rough year, let's make it properly.
Put it all in this.
Let's make it properly rough and move on with it. So, we have just short of 10 million shares in Alpha, Canadian listed company. It has a very big tin project in the DRC. Last year, February, was at 70 Canadian cents. This year, February is at 20 cents. We are still very positive about the project, but the market write-down on that alone is 45 million. And it's not a true reflection of what the actual business is worth or what this project is potentially worth going forward. So let's see where it is in February. The business as a junior exploration company, is one of the few that will be fully funded through to cash flow going forward. So let's see where this Alphaman sits in February 2014. I think we'll all be surprised.
Yeah, so as you say, and you have been conservative with the impairments, that's what you're saying. Talk to us about China right now, because disappointing figures have come through. Q1 figures, we're waiting for manufacturing data to come out this week. And overall, if you're looking at what commodity prices are doing, they've continued to trend lower. What's your assessment of the Chinese economy right now as you see it? I mean, especially on the commodities front, because there's also views that there's overstocking there and still working through that supply.
Yeah, without doubt, the Chinese really cannot depend entirely on their domestic market. All right, they are geared. If you have a look at the expansion in Chinese production across the board, I mean, today China is a bigger producer of ferrochrome in South Africa. South Africa owns 70% of the world's chrome resource, China 0. Yet they are the largest ferrochrome producer in the world today. And I think there are some Chinese ferrochrome producers who, for the first time, are finding out what it is like to lose money. Because chrome markets have deteriorated. There's a complete oversupply of chrome ore, which the South African producers have actually created. And China really needs it needs the American and European consumer market. So we've seen some, I think, quite positive numbers, or at least signs coming out of North America. Maybe those are cancelled out by what the sort of ongoing crisis in Europe. But without the international consumer market there, the Chinese are going to struggle like anyone else. Yes, they do have a massive internal market, but it's not enough.
Just very quickly, because we have run out of time, but what does this mean about the prospects for return to profitability for Metmar next year?
We're very confident. We're quite comfortable where we are now. We've looked at diversifying the business. We've restructured ourselves completely with the corporate finance team that are in place. And our focus is on trading and to diversify and expand the trading business. And we're very positive going forward.